Mr. Shelby, may I tell you something? You have a lot of enemies.
Does your ambition have no limits?
I have no limitations.
I have no limitations.
Keeping on back from the next say song. Never tell her back that I never stay running. Sipping on facts, damn know I got stacks in the lab. Taking bitches straight for another cat.
What's going on, everybody? Happy Wednesday. Here at Market Makers, we need to do a crypto update. 2 days ago, I did a video on the 2026 cycles. Go watch that video because I'm not going to cover them here in today's video because many of you watch both videos. Watch those videos because I cover 2 cycles, very powerful, that are predicting a greater than 80% chance, an 80+% probability the year finishes green for the markets. And as you know, the markets, if they finish green, what do you think will happen with the crypto space? What we have going on now, a kinetic war, a hot war in the Middle East, oil price spike. We're going to cover it in the charts. I personally believe if this indeed is a short-lived conflict, meaning it ends sometime here in March or into early April, you're going to see a breakout for a summer rally going into the summer before a top and a retracement with the midterm elections. That's what I think is going to happen, but we have to see it in the charts. So we got to cover these levels of where we are at right now. On the screen, we have crude oil. We had a massive spike breaking a long-term downtrend back since 2022. We broke out above it, went up to 120 a barrel, and then crashed back down 30+% overnight over the weekend. And now we're sitting at 87. We rallied up from 55 to 87. This is important because the narrative has been on Wall Street, stagflation. You see it on X, you see it on YouTube. See, I told you this is the stagflation. Now the market's going down 50%. Now everything's going to collapse. Look, is it possible? Sure. Is this anything like 2022? Not at all. We had record 40-year high inflation with the fastest rate hiking cycle in history, and we had the conflict go off with Russia and Ukraine. Not the same thing. On Trueflation, inflation is less than 1%, meaning the rate of change, not the aggregate embedded inflation. But the CPI came in today in line with inflation. So again, inflation picture is stagnant right now because we don't have anything going on yet with oil. If that oil price stays elevated for weeks more, months more, you'll see that higher cost filter into the price of everything. But as of right now, you're not going to see stagflation from this oil price. But that's where we are right now. Once this resolves, you'll come crashing back down again, okay? There's plenty of oil. The issue is transportation. Everybody has oil. So it's not that's not the issue of the actual supply of oil. Transportation, and if the pumps stay off too long, takes a few weeks to get them back online. We look at the IGV, our correlation of 73% with Bitcoin, IGV being tech stocks, hot pink, rallied up, Bitcoin's rallying up. We zoom in. Here's IGV, went right to that predicted support level. Nice spike up, may pull back down. We want to see this stay bullish. We had our climax candle, right? Climax, reaction, retest. This gave you a spring, and in a spring, you got that big buying trend. You went up 15%, and now you're pulling back some after that big rally. Totally normal. You want to see this hold a higher low, start to move to break out to the upside if we are indeed to get a summer rally. So when we look at Bitcoin, what do we have recently? We had the total lunar eclipse, and the very next day, Bitcoin rallied 7,000 plus points, right? So we got a nice pivot off the total lunar eclipse, still going sideways. We have March 18th for the new moon, and then on March 20th, the spring equinox. I cover these cardinal points in the video from 2 days ago. Once again, go back and watch that. Let's look at some cryptos. Guys, if you want to trade these markets, by the way, and you want to support the channel, check out BitUnix. You get up to a 20% bonus with our link. up to $400 you can get with our link. Be a Market Makers VIP. You come in as VIP 3. Check out that link. Anybody around the world can trade cryptos on BitUnix. No KYC required. So check out that link. And if you want to join our membership and get these videos on YouTube or in our Discord, check out the join button right there on YouTube. Looking at Bitcoin, 3-day chart. Couple of things here. Let's remove this. If we get a summer rally, and if the S&P breaks out to move towards 7,500, which again was my max bull case target, we hit the bull case target of 7,000 in 2025 on December 26th. That prediction back from April at the April low. Took till December 26th, but we got there. If we elevate to that next level, what does that mean for Bitcoin? Because Bitcoin topped October 10th, sold off 50%. You're going sideways on a 3-day chart. You are range bound. We can tighten this base here. 63K, 74K here at the peak, and you're at 70K right now. What could that mean? Well, from a macro perspective, zoomed out, we can look at these targets. Broader targets here. We're going to zoom in on the 8-hour time frame to look at some more near-term targets. But if we get that rally, if this war subsides and there's some peace and some stability, you can see Bitcoin break out. If Bitcoin breaks out, you have to look at 93. 100K Bitcoin would be my target for a summer rally. Again, target doesn't mean top. It could be the top, but that is a target for Bitcoin. Key psychological number also starts putting you back into the base of this candle structure and over here as well. That would be a key target and just past this candle structure target, okay? From a zoomed out macro perspective, 100K would be my summer rally target. Just to put that in perspective, what is that? From current Bitcoin price right now, that's a 30,000 point rally, 44% move. If you came up to 112K, which is the 786, you're looking at a 42,000 point rally. So as a trader, what you should care about, now if you're an investor, it's different, but as a trader, you want to see a breakout to the upside or a breakdown to the downside. That's the two directions you should care about. What you're doing now is building a line going sideways, but it will resolve up or down. Peaceful resolution to the conflict or somewhat peaceful resolution to the conflict. I think markets break out. I think cryptos break out, and I think you rally into the summer for a summer top, okay? That's my personal prediction, but you have to see it in the charts. You need to see a breakout. What about the near-term targets? Because we talked about 83, 85K. That's based off the projections of where price is currently coiling. Made a nice triangle, broke out above the triangle, we retested the triangle, and then we bounce back up. You got a couple different patterns here on the 8-hour time frame. You obviously have that triangle breakouts. You're also putting in what could be a double top, which doesn't necessarily mean it breaks down. You want to see if it can hold a higher low, right? Hold a higher low. Ultimately, you want to exit the trading range above 72 and find your way up to these near-term targets, 83, 88K. Those are your near-term targets. You can look at this from a perspective of measured moves, if that's what you prefer. If you don't understand how to use ratios, which most people on YouTube do not. But you can look at this from measured moves from your trading range, right? Put it to your breakout. Doubling of your range is 88K with a trend line. Going to the downside, if everything broke down and people are correct and the low is not in, I think the low's in for a rally. But if people are correct, doubling of that move is 45K to the downside, and you have 51K right there at the 1618. But this is where you're at, and we can adjust this range as well. So if we want to capture the high of the rally, we'll move our trend line to the high. That's 74. Let's tighten the bottom, right? Because that was your wick so far that has not been tested. Let's go right up here, right to that close. And then you can see here on your chart of Bitcoin, you have a range here of 62.8, so let's call it 63, and 74K. That's your range. Might be making a double top, might be making a W. Could be getting a move like this, pull back again, come back to the upside, break out. It all depends on the catalyst. Tell me how the war resolves. I'll tell you what the next move is. If you told me ground troops will be there in 3 weeks, this thing's going lower. If you told me we get a peaceful resolution in the next few weeks, sometime around the spring equinox, March 20th into early April, this thing's going higher, okay? So that's how I'm viewing the market. You're range bound. If you haven't done anything, if last time you watched my video was February 7th, you're the same price. Here in March 11th, you're the same price you were February 7th. You had the ups and downs, but you're still in the same range in crypto, okay? So let's look at a couple of things real quick. Let me look at the indicators. So looking at the indicators, RSI is barely bullish. You have the volume has not been strong. Got a few days here on the daily chart. Looking at the momentum, still weak, but on the bullish side, not a lot's changed. If we look at Ethereum, near term, just bouncing off of our trend line. Look at your trading range, 1823, 2149. So again, depending how you like to trade, right? Because people trade differently. I swing trade. Are there trades in here? Just guys in our room going ham on these ranges, because once you have your climax candle put in here, you get an automatic reaction. You get a three-way move, and then you get a retest of the low. Once you have that low, that's a potential long. Ride that up to where you formed your trading range, that's a potential short. Ride it back down to retest that low again, that's a potential long. And of course, you came back up to retest the top of the range again, that's a potential short. You can trade that way. It's a lot of work. I don't like to do that. I'm in Ethereum at 1900, so that's where I'm at. I've been building my position in Ethereum. I'm in at 1900. We're at 2052. Nothing to write home about, but I'm playing for a move. We could retest the trend line again. I'm playing for a move to the upside above 2150 with a breakout near-term target 2658 based off this trading range. If this broke to the downside target 1458 as well as 1283. But as you know, I believe the bias will be to go to the upside, barring something catastrophic in this kinetic conflict, such as ground troops, mass casualty event, something like that. Looking at the trend line, you're in an upward bias, but you have not been able to break your trading range. So I think it's 100% valid to have a different view than me. I'm just sharing with you my view. If we want to look at longer term targets, if we get a stronger rally into the summer, because these are your near term trading range targets. What are those longer term targets? 50% from the all-time high takes you up to 3,350. Right here at the top of our resistance range, the 618, a very commonly retraced 2 fib, takes you to 3727, and the 786 takes you to 4,267 from your all-time high. All of these are possible. Looking at these from the perspective of a trader as trading targets, okay? All of these levels are possible depending what happens with price, depending what happens with the conflict. As of now, you are still going sideways. You have an upwards bias in your trading range. You need to break out above 2150 and hold above it to propel yourself to the upside. And that's going to happen, and you'll see the markets moving higher. If that's going to happen, you'll see everything going higher because crypto is beta. If it starts breaking down, markets could be breaking down below key support. Again, you can watch that in the other video. Look at the indicators real quick. RSI, bullish territory, but barely. Volume's nice on the volume delta. You look at your volume, higher lows. You can see it bouncing off along the trend line. Let's look at Solana real quick. Solana, same thing. Got to break above 91. Want to stay above 78. Tighten this trading range. You can always adjust this to incorporate your current range high that you're in your sideways market, which would be 94. So you need to break above 94 to the upside. You can do this multiple ways, obviously. You can pull back, get your W, come up, maybe do something like that, break out to the upside, but you need to break out. Right now, you're mid-range, you're 85, right? So you go down 10 bucks, you could be breaking to the downside. You go up 10 bucks, you're breaking out. So you're mid-range, and just like everything else, you've been in here since early February. So you haven't missed anything, but if you tighten your trading ranges, lots of areas where you could have been buying, could have been selling, could have been buying, could have been selling if you want to trade this way, okay? I'm looking for swings. I'm looking for swing out, swing down. This type of market, by the way, in the stock market, 70, 80% of the time, you're going sideways. You're building a line. Only 20, 30% of the time, you're actually trending. This is normal, but I'm waiting for the breakout or the breakdown. Hope you guys enjoyed the video. Hope you guys have a fantastic weekend. Check out the join button on the YouTube if you want to join our Discord. I would love to see you guys there. Be sure to like and subscribe. Follow me on X at Market Canary. Talk soon.